Thanks for staying with us on SABC News. Let's take a look at what's moving markets locally and internationally. We'll start in Asia, where their markets rallied after blockbuster results from tech darling Nvidia boosted Wall Street overnight, and a retreat in US bond yields eased pressure on borrowing costs globally. Now, a round of soft surveys on manufacturing had also revived hopes of central banks that they were done tightening, while a rally in the broader Asian markets also helped sentiment. So the Shanghai Composite Index edged up 0.1%. Hong Kong's Hang Seng Index added 2.1%, and Japan's Nikkei Stock Index rose 0.81% in a fourth straight session of gains on Thursday. That's a longest streak since mid-June. Let's go to Wall Street then. US stocks ended sharply higher on Wednesday ahead of much anticipated earnings from Nvidia, whose prized semiconductor chips are widely used for artificial intelligence computing. Shares of the chip maker jumped 9% in after-hours trading after gaining more than 3% at the close. So the Dow gained more than 0.5%, the S&P 500 jumped more than 1%, and the tech-heavy Nasdaq leapt nearly 1.6%. Coming closer to home then, the JSE is trading higher, the all-share index gaining 1% to 74,799. The industrial 25 index is 1.2% up. Financials have added 0.8%. The top 10 resources index is 1.3% firmer, and the precious metals and mining index has increased by 2.6%. The rand is trading around 18 rand and 58 cents to the dollar, 23 rand and 57 cents to the pound sterling, and 20 rand and 17 cents to the euro. Markets in Europe are firmer at this hour. Britain's FTSE 100 has added 0.4%. The CAC 40 in France is 0.4% higher, and Germany's DAX has added 0.25%. Let's go over to commodities then. Gold is trading at $1,918 an ounce. Platinum at $927 an ounce. And the price of a barrel of Brent crude oil is at $83.48. Let's get some analysis on those numbers then. Patrick Matidi is the head of equities at Aluwani Capital. He joins me now. Patrick, thanks so much for your time on SABC News. Jerome Powell set to deliver a very important speech in the US. Give us some context about what's that going to cover and how their markets are reacting ahead of that.
Good afternoon, and thanks for having me. And yes, this is an annual gathering of central bankers across the world that are hosted by the U.S., that being Jerome Powell, the U.S. president of the Fed bank. And in that symposium, what they try and do is to discuss, issues of common interest that are pressing from an emergency point of view. So typically of late, interest rates have been that topical, and obviously global inflation. And that speech tends to set the tone for what the rest of the other central bankers will focus on, when they come back home to their respective countries. So this time last year, as I said earlier, the big area of concern was global inflation, where, is that peaking? And I suspect the market will look for a similar thing this time around, where I suspect, the market will be looking for hints of when we can expect to see a rate cuts, especially given that, the last few inflation trends continue to point towards inflation having peaked and starting to come down.
Mm-hmm. Let's stay in the US. S&P on Monday cut ratings for some US banks, and they've said there's quite a difficult or tough road ahead there. What's happening?
So we kind of saw a little bit of this in May, where I think it was the Bank of Silicon Valley that actually failed on the back of high interest rates coming through and them not being able to support their depositors. What has since transpired is that there are some sectors of the U.S. economy, especially on the property side, that continue to struggle, as a result of the lingering impact of COVID. So with property, especially the landlords, they're struggling to get people back, into the premises, especially on the office side. And with those vacancies, still being up, it means therefore that, they are unable to pay and service their loans, with the banks. So some of the banks who are overly exposed to the property sector are therefore taking strain and showing, high bad debts, which is why the credit rating agencies like S&P have actually come down and cut the outlook for some of those banks.
All right. Speaking of outlook, what's boosting sentiment in Asia? What's moving their markets?
Look, I think Asia, has been sold off quite harshly the last, sort of a few weeks. In fact, on a year-to-date basis, we continue to see, especially China struggling with a lot of the economic data, coming out and actually disappointing. I think the last day or so, I think that there's a bit of a relief rally. We've kind of been sold off too harsh, and I think the U.S., especially on the tech side, the good news there. I think we're catching a little bit of that, in terms of that sentiment spreading onto the rest of the world, where we are seeing your Nasdaq and the likes actually trading up.
Let's come closer to home. What's moving the markets on the JSE? What is our lunchtime looking like?
Yeah, so thankfully we were up about 1%. So we're building on yesterday's gains, and then long may that last. And then, those gains across the board. We're seeing gold stocks up and quite nicely, both Anglo Gold and Goldfields, but also some of our industrials, especially the likes of, Mr. Price on the retail side, and also the banks and the property guys like, Growth Point are also trading up nicely. So broad-based gains, and as I said earlier, long may it last.
Okay, Patrick, I think one of the big stories of the day here in South Africa, in centre near the JSE and also around the world, is BRICS inviting those other member countries to join. Does that have the potential to move markets? And outside of the markets, what's the reaction going to be around countries like Saudi, the UAE and Iran set to join in January 2024?
Yeah, I think the market movement so far has been fairly muted. And I think rightly so, because we need to see a bit more detail, before we can get overly excited. But I think from an economy point of view, I think it's a good thing that we have these new members joining in, especially, some of the guys with much stronger and bigger economies, the likes of the UAE and Saudi. So I think that's a positive move, because it means, from a trade relations point of view, hopefully we can trade with a lot more partners, and then therefore, be able to grow our economy for our mutual benefit. But I think all that detail still to come through as to what exactly and when and how before we can see the markets actually start to react positively.
All right, and with just 30 seconds left, NVIDIA taking up a lot of the headlines, the superstar company. What other local and international company news do you think is exciting or interesting, particularly for shareholders?
Yeah, I think NVIDIA is probably a unique one, because they are gaining on the back of the AI, a surge. We do not have such exposure in the local market, unfortunately. So one has to look elsewhere for opportunities, especially on the tech side, where we have seen the Nasdaq, year to date, being driven by very few stocks that are benefiting from the artificial intelligence surge. But locally, I think there's quite a lot that we can focus on, especially on the mid-cap side. We'd like to believe that the impact of load shedding is now behind us. So this time next year, that should be something that we can look back and actually be excited that we have managed to overcome that. And so a lot of the local SA Inc. type companies should therefore come out with a better results going forward. So we think there's better opportunities on the local front compared to some of the NVIDIAs that have run very strong, but they are now starting to look very expensive.
Okay, some shining light there, Patrick. I hope if we chat next year, we don't have any load shedding, and you've proven right, and those SA Inc. companies are doing really well. Thank you so much for your time on SABC News this afternoon. Patrick Matidi, Head of Equities at Aluwani Capital, joining us there for some market analysis. It's time for a short break. When we come back, more business news here on SABC News. Do stay with us.